Mr. Russell Duffey, how you doing today, sir?
I'm doing great. How are you doing?
I'm doing all right. I'm doing all right. So I was thinking about it as I was saying your name aloud a few times. If your name was a cocktail, what would it be? Because I feel like that's something that would be great to order. I'll have a Russell Duffey, please.
It would be, for me, it would be a really nice IPA. I would tell you from that standpoint. I'm an IPA guy.
I mean, I feel like you should explore licensing rights for it. I think it needs to
You
be
you may be
something.
right, right?
Maybe
Duff, right?
maybe
You
like
know,
a
the Simpsons might have beaten me to that though with Duff beer, right?
well, I guess I mean it's like an abbreviation of your name. I mean, maybe like
Right.
an extreme appetizer of some sort. Like I'll take the Russell Duffy challenge or something. I don't know.
I'm in. If you're in. I'm in.
All right. I mean, we can work something out. I'm sure there's a restaurant chain somewhere that we can approach.
Absolutely.
Uh,
Absolutely.
we'll talk after. But really, what I want to talk to you today about was, more about the kind of what we're dealing with in terms of market conditions, what agents should be thinking about, and really how they should be approaching this. Because for some, the big thing is the market hasn't maybe taken this turn in close to a decade. So you've got almost dare I say, an entire generation of agents who have very little
Right.
experience with such sort of communication and sales tactics. What are we seeing from that standpoint, and how do you think agents that especially the ones that have only been in it a couple years, should be looking to approach it?
Yeah, it's a great point. I mean, I think there's, on all sides, whether it's on the retail agent side, wholesale side, carrier side, there are people in this business that haven't experienced the fact that we're seeing tightening terms, increasing rates, shortening of limits, and quite frankly, a lot of folks have sold insurance as a commodity and not on the value that they provide to their ultimate client, right? Communication is the biggest thing, though. You've got to be out in the market well in advance. Your data, your submission has to be just spot on, right? There are so many submissions hitting the marketplace right now. I talk to markets all day, every day, and all they tell me is they have more submissions than they can handle right now. So what do you do as whether you're a retailer or a wholesaler to get that underwriter who has a stack of submissions to stop and look at your submission has to be spot on. If it's not, you're just not going to get the result you want.
Yeah, and that submission definitely needs to be improved during these sort of times. But when you talk about the idea of maybe not even having a great option, a perfect or a best option, what does that look like when you're kind of moving down the line and you really need to make the best of a bad situation? What does that conversation need to be? How do agents need to focus on that?
It's a good point, and you have to do that all the way through the chain, right? So as wholesalers, we do that with our retail clients to say, okay, your insured has an exposure that's going to be difficult. Number one, potentially in this marketplace, and the available markets are 1, 2, and 3, and that may be it, right? We would suggest that you explain to your client now, this is going to be different than it has been. Doesn't mean it's, they may feel like it's a bad thing. It doesn't mean it's going to be bad. It's just going to be different, right? In years past where they may have had 5, 6, 7 different possible quote options and varying coverages and limits. In many cases, we're finding to get that one that actually gets the job done, that's a really good job that gets put in by brokers at this point in time. But communication, you're absolutely spot on. You got to be talking to your client.
Yeah, well, and even talk about that, like you said, like even though there might only be one option, how are they presenting the fact that there is only one? Because sometimes they're just having that, like, even if it's twice the price or whatever it is, just saying like, listen, like, we approached X, Y, and Z, but they wouldn't even give us a rate or something. It's like, it's just, how are they communicating that aspect of it?
Well, and I mean, that's part of what you just hit on. Part of it is you need to be, as a retailer, going, here's where I went. These are the folks that normally I would go to. This is how I would approach your risk. This is what we would do to provide solutions for you. These are the partners that we would go to, and then you need to be able to come back to them and go, all right, these guys will do it, but they only want to attach up here, and you don't meet that criteria. Or These guys, this carrier will do it, but they're going to exclude sexual and physical abuse, and that's something we need to cover for you. So that's not an option you really want to go down right now. In the past, where you had, hey, I had 6 options, and these are the 3 best, that was a kind of a lot of the way the retailers and even wholesalers would work. Now it's, hey, maybe here's the one option I have for you. Here's where we went. Here's all their responses. You do need to provide that, because I think it's important that ultimately the insured needs to know, all right, I had a thorough marketing of my exposure, and this is the answer for me. And like I said, it may not feel good at this point in time, because it's, hey, this may be the only answer I've got, but I at least understand what they did. What will get any type of broker, wholesaler or retailer in trouble is just go, hey, here's the only one quote I got, and not tell the work and the value and the effort that they put in behind it. And that plants a seed in someone's mind to go, maybe something else is better out there. Maybe there is, but if you're not telling and providing what your value was in it and why this is the option, you're going to leave yourself open for questioning.
It's definitely a story worth telling, and telling, with enthusiastic color. You know what I mean? Like in terms of like making sure that you're very descriptive. You really get into it. And you make sure that they're kind of along for the ride with you as they understand the depths of it.
Right, and good point. And do it. For example, today is not the right time to be calling up your client and telling them that that's going to happen on 7/1. Right. What the idea is, you should be having those conversations now. Call it for an October renewal, a November renewal. Hey, just so you know, I just wanted you to know what I'm seeing in the marketplace. Your renewal is coming up in November. I just renewed another account just like yours. This is what I had to go through. I wanted to put you on notice now. Need to make sure that we get our statement of values or our loss runs in the right order. Start planting that seed of, we've got to be spot on to do this, and providing some information up front of what that ultimate client can be expecting.
Yeah, those expectations are huge, because like you said, coming out of a time period where, things have been easy, right? It's minimal increases, in some cases, rate reductions. I mean, if you can't keep a rate reduction, what are you doing? It's,
Right. No, well, and you mentioned it earlier. There are folks in all aspects of the value chain, from carrier all the way down, who have never had to sell anything but a decrease, and all of a sudden that switch has been flipped, and it definitely makes you have to pivot.
Yeah, completely. And I want to kind of talk about the coverage aspect of it a little bit too, because that, in some cases, can be a bigger deal than necessarily the price in a lot of ways, because if it just doesn't work for the client anymore, that's where it becomes even more challenging. And sometimes they might not even be able to get a particular coverage or limit that, they basically kind of feel is bare minimum. And it's that conversation is one that's, I think, even harder to have, because there isn't, they're just at a bigger risk, and they have to actually just adjust the way that they're doing business, or some other fashion.
That's the kicking you while you're down discussion. Hey, your pricing is going up, but while we're at it, these things that you had covered previously may not be covered. To your point, at the end of the day, what's causing this is carriers needing being unprofitable. Right. And ultimately, up until, call it Q2, when COVID really hit, and that gave it its own dynamic. But ultimately, the rate environment was not keeping up with the loss costs of the carriers. Right. So ultimately, there's only a couple of ways you can do that. You can either write more premium, or you can be more profitable, or you can bring in investment income. Well, right now, their investment income's not that great. The other way to be more profitable is to tighten your box, right? So I used to write everything under the sun. When I'm a carrier that writes restaurants, I'll write any restaurants you bring to me. Well, now I'm only going to write white linen restaurants. I'm not writing bars and taverns. I'm not going to write liquor. And then on top of that, you have a $25 million limit. And this year, for the same price, I'm going to give you $5. So you're right. It's both of those dynamics are happening. And it depends on the ultimate insured, or which one is maybe the worst kick, but with pricing is going up, and definitely terms are tightening.
Yeah, and what does that look like in terms of them maybe looking to expand their partnerships, right? Like, when they start losing, options and things like that, like what advice would you have, for carriers to be able to make sure that they have, all the information at hand in terms of double checking, triple checking the relationships that they have and looking to, find new ones. What goes into that process, and how do you, kind of suggest them to maybe approach that and be successful with it?
Well, so there's kind of a double-edged sword right there, right? So as a carrier relations guy, I'm always pushing our teams to deal with who we believe our partners are, because we believe that adds value to our clients and ultimately the insured. And those long-standing relationships, those insurance carriers that if I rattled off all their names, you would know them all. You know they're going to be there when the claim comes in. But there is capacity. One of the things that drives sometimes the market down as far as the rating environment is just excess capacity, right? So there's been a lot of capacity out there. And all of a sudden, a lot of that capacity is shrinking and going away. You need to make sure, that some of that capacity may still be there. The question I always tell folks is, are they going to be there when the claim comes in? Is that a partner that you want to put your insured with and put their business with? It's great that they have capacity for you right now. The double-edged sword is sometimes you might need that capacity, right? So you in a market like this, we're looking for a lot of the capacity we can get. But I can tell you, there's a term that we are hearing more of these days called flight to quality. As more people, as they see what's happening in the marketplace, leaving some of that capacity. I wouldn't call it questionable. I would just say it's new capacity, right? It's newer into the marketplace, and going to carriers that are long-standing players in the field and folks that hey, through thick and thin, no matter what happens, I know they'll be there when it comes time to pay my claim.
You touched on a couple of my favorite things, and it's that, like you said, I've said those words many times. Will they be there to pay the claim when you have it? Like, yeah, it's great that they're $50 cheaper, whatever the number is, right?
Right.
But then two, I want to bring it back to the whole profitability thing in terms of yeah, there's a reason these prices are where they're at, and how much of that do you think? Let's say this. How much of that do you think is currently making it into maybe like in the last couple months? Was that part of the conversation that you think you were hearing from agents, versus how much of that needs to be in the conversation now in terms of talking about price as it relates to profitability for these carriers, and like you said, their capacity, and how that also impacts their ability to pay the claims when it does come time?
So let me make sure I understand the question. So is the question, how is the carrier profitability affecting that? Or
well, I mean, just in terms of the agent properly addressing that, with their clients, right? In terms of just having that conversation, back to the transparency, back to the
right.
communication. How much of that do you think was going on before? My guess is a little bit to none. To how much of it do you think should be happening now?
Right. So I think you would be correct. When there's a lot of capacity and there's a lot of quote options, I think there might be a tendency in the marketplace to, buy insureds at least that aren't getting the right information to say, I buy the insurance so they pay to have the claims paid, right? So have them pay my claims. And that is the reason they buy insurance, make no bones about it. But if the retailer is not talking to their client about what can we do to help mitigate, you've had problems with your profitability, Mr. Insured, right? Hey, by the way, you took in $100 last year. The insurance carrier paid out $300 in a marketplace like this.
Yeah,
that's not going to go well. It's not going to get you the favorable response that you want when your renewal comes up, right? So what are we doing to help mitigate those that $300? How can I take that down to $50 so that carrier goes, okay, they are proactively looking at why they need to be a better risk for an insurance carrier, right? And I would agree. I don't know that I think it's happening much more these days. I don't know that it was always happening. Certainly on much larger accounts that have more defined risk management programs, of course they're doing that.
My favorite line was always, talking to somebody, it's like, hey, listen, you paid them like $5,000 in premium and you had $100,000 medical procedure. Do you think they're just in the business of giving you $95,000 for
Right.
free? It's like walking into Walmart and having a shopping spree every time you go in.
Right. Absolutely. And ultimately that's, if the carriers don't follow that, right, that's the whole idea of, hey, rates, if they keep rates at a certain level and loss costs keep going up, the carriers put themselves in this problem just as easily as
Yep.
we do, right, as anyone else.
Yeah, it definitely makes sense. I mean, so if you had to maybe boil it down in terms of the most critical areas to hit, for an agent in terms of that, communication, what would be the one, two, maybe three things that you would think that they absolutely have to be addressing, maybe in order during this time?
I guess the first thing, just from the quote process, right? I mentioned this earlier. You cannot have enough data these days, right? So the days of, hey, I think my payroll is 100,000. I'm not positive. It might be 125, and I'll get you loss runs after the binder is issued. Those days are gone. You've got to have very clean, very good data, be able to paint a picture for an underwriter. And then, of course, we mentioned it. If you've had profitability issues, it's incumbent upon an insured and the retailer and the wholesaler in the process to make sure that they're showing a picture of why that risk is going to be better going forward. So what have we done? What is our risk management process to do better here? Data, though, I can't have a conversation with a carrier at all about anything. It could be anything at all, and I can't have a conversation with a carrier that the word data doesn't come up. And you cannot have too much data or too good data. It is paramount right now to getting the best deal done in the marketplace.
All right, Russell, I got two more questions for you.
Yep.
And, I'm kind of curious in terms of, as you see it from again, market relations sort of standpoint, what is, one thing that we're not necessarily talking about right now in terms of improving it? What is around the corner? What are we looking to get to maybe kind of change the dynamic? Where are we trying to go with these relationships, and how can we maybe look to kind of do it a little bit better?
With our carriers?
With the carriers, with just in general, just again, everybody coming onto the same page. Is there something back, like you said, to the data? Is there just a way that we're going about this that could be enhanced, maybe made a little more streamlined? Is there something that you see that just kind of continually is a little hitch in the whole process that might smooth things out a little bit?
Well, if you talk about data specifically, I can tell you there are a lot of initiatives amongst carriers, amongst retailers and wholesalers of how we more cleanly share data, right? So, and that I think will be the next positive step that comes in our where it's, the data used to be, okay, the insured filled out an application, it got to the retailer may do something with it, it goes to the carrier, it goes to a wholesaler, and it's like a game of telephone, right? Sooner or later, that data somehow, some way degrades by the time it gets to the place where the ultimate decision gets made, right? So that could be good or bad for the decision. It depends on how that looks, right, when it gets there. I think what you'll see is, as we move forward, is almost real time. Here's the data through the value chain. It gets shared exactly as it is, right? And it still has to be good data, because it's bad data in means bad decisions get made. But that's probably the area where I think you'll see greater efficiencies in trading relationships. There always used to kind of be this thing of who owns data and who this is my account, this is your account, that's your data, that's my data. The reality is, if you want to get it done right, it's kind of everybody's data. And there are hurdles and barriers to certain things that you have to be careful of. They're privacy type things. But when it comes to providing the best product, that transparency of data is going to be, and it's being worked on now, but it's going to be probably the next thing that really provides some extra efficiencies into our business.
I had one quick question. If you had to give me just sort of your best sort of ballpark guess, what's the timeline you think before we're, maybe actively seeing that in a meaningful way?
I would tell you it's in some cases it's happening now, and I would tell you it is everybody's. I laugh. That's like, and I'm the insurance guy, right? So
Yeah.
any meeting I'm ever in with the IT guys, they say everything they say, and the only thing that people care about at the end is, okay, when do I have that, right? And and they kind of hem and haw about it. I would tell you that's certainly within. That could be some folks would tell you that's happening for them now in small bits. Certainly in the next 12 to 36 months, that's going to be more and more. 36 months from now, I think we'll be exchanging data way differently than we even are now.
All right, Russell. Last question to you. We've covered a lot in terms of the market and the relationships behind it. I'm kind of curious, more specifically about your sort of viewpoint on things. What are you most excited about as it relates to insurance? Kind of your role in it, and where do you think you want to ultimately kind of reach out and get to? That's kind of got you excited.
That's a good question. It's interesting. I've been with my firm for 20 years now, right? And have had several different roles. The role I'm in now didn't even exist 3 years ago. I think for me, and someone that ran a branch and has really enjoyed teaching people the industry. And for me, what I enjoy about this industry is 3 years ago, my role wasn't even in place for my carrier. Okay, 3 years from now, what roles will be required that opportunities for people within our company, people who are coming into our industry will have because of what happens with the efficiencies and the things that we do with IT and the way that we improve how we do business. I think our industry is always changing, and it's I think we get a bad rap. I mean, I think people hear the word insurance, right, and they think of a dusty book, and somehow it's boring, and it couldn't be further from the truth. The way things are going, you cannot do anything in this world without insurance. You can't buy a house, can't buy a car, can't start a business. You can't, you can get travel insurance to go on vacation. There is just nothing that happens. It's a social tool that has to happen. So as the world changes, insurance has to go along with it. I'm just always amazed at how we adapt. 20 some odd years ago, people were, hey, we're not going to need independent agents. We're not going to need wholesalers, whatever. And here we are, still just absolutely knocking it out of the park. So what will the next 5 to 20 years hold for us?
Russell, I'm going to leave it right there. I appreciate it, sir. That was a lot of fun.
Yeah, appreciate it. Thank you.